Please read through this disclaimer. Buying a property is always a big decision. Please do your own research before committing to any purchase. Today, 𝘂𝘖𝙞𝙞 and I is going to share with you 5 insights of buying a new home investment. A very, very hot topic. Now we are in entering month of August. The headlines in June and July 2022. What are the hottest topic? Everybody is talking about it. Everybody is talking about what? I think this is what all of us are talking about. Interest rate raise. Home loan interest rate. Singapore home loan interest rate keep raising up. UOB, DBS, OCBC, the rest of the bank. This is one of the hot topic in the headlines in June and July. Other than this, interest rate keeps going up, and what happened next? Also in July, we will see the business time. Congratulations to all the landlords who owns a property in Singapore. This business time has stated very clear. Our private condo rental have been marching upward steadily for the 17 straight months. In May, they were 18% higher year on year, which is last year 2021 May till now. May 2022, they raised 18%. Congratulations to all the landlords. And also, a hot topic to talk about, Singapore property price has remained. Property market is expected to be resilient. Everybody is talking about this. Interest rate that goes up, rental is going up, then property is still selling very fast. And this thing happened, and what has happened just recently? Interest rates go up. This is another hot topic. Everybody is talking about this Amour residence, which is just happened last week. I'm not sure whether you are one of the proud owner or not, okay? And this shows that there is a very, very strong demand in Singapore property market. Amour residences in one day launched, sold over 98%. Everybody come for balloting. We have collected more than 1,455 checks, more than 90%, 98%. So these are the hot topic that we are talking about in the last month. What happened with this interest increase? Does it really impact to your purchase or not? I'm going to share with you the numbers. It's very important to understand. Is everybody is talking about interest increase. Are you stop purchasing? Does the interest increase affected your purchase? Affected your decision? Should you enter now or should you enter later? Let us go through the numbers together. We are comparing. If you are entering a purchase at $1.6 million, getting a maximum loan of 75%. So based on 2% interest rate, based on 2% over 30 years loan tenure, what is your monthly installment? Your monthly installment is 4,435. So now, if the interest increase to 3%, how much is the 1% that have increased? So you will have to pay $624 more. So this is the real case, okay? Because interest increase means it's increased. You will have to pay for your higher monthly installment. Yes, you will have to pay for your higher monthly installment. So you will see the impact of 1% is around $624. with the rising of rental, you can decide will it help or not. So this is how much it increased for the 1%. So I'm going to share with you the insights once of the day. Invest with a prudent financial plan. It is very important when you wanted to put your money into property. We are not talking about $100, $200. We are talking about few $100,000. So you need to do out a prudent financial plan. Make sure that you are having a very low risk. Where you want to put your money in, how much is your return, what is the worst scenario will happen to your money when you are buying a new home. That's important, right? So how much money do you need? If let's say we are going for a $1.6 million property, assume 75% loan. What are the upfront money that we are looking at? It's a very simple calculation. You can base on 1.6, $2 million, $1 million, or $1.5 million, okay? Minimum down payment, let's say your loan is approved at 75%, down payment is 25%, which is 400,000. And your stamp duty based on Singaporean first property is 48,600. So that works out to upfront payment. When you are buying a $1.6 million, regardless you are buying new launch or you are buying resale, minimum upfront is 25% plus stamp duty. So 448,600. This is the minimum that you need to get ready. Get ready this money before you enter your investment. And now comes to next. When you are buying new home, what makes people stop not entering new home is there is a concern. I am not collecting a single rental. Buying resale, I can collect rental immediate. But buying new launch, I need to every month pay monthly installment. Pay until TOP. I'm not collecting a single cent. Why not I buy resale? So today, I'm doing out this very prudent financial plan with you. Then you need to know, buying new launch, what are the things that you need to get ready. Other than this upfront payment, we are doing a 4 years safety net analysis together with you. So as you know that buying a new launch, it is a progressive payment. You are buying from a plan, it takes about 4 years to complete. When you are getting 75% loan, this is an example based on 25 years. From foundation, there is zero repayment needed because there is the developer have nothing to build you yet. They have not built the foundation. Once they complete the foundation, they will call 10% from the bank that you apply for the loan. Then your monthly repayments start kicking in. Of course, the amount starting looks very good, very little, $358. Then it takes about 12 months to complete the foundation estimate, okay? Then the superstructure will be kicking in. So this is progressive payment, step by step by step, okay? After this stage, we will go to another stage. So all this from foundation to TOP. TOP means that when we have gotten our key, these are the period that we keep paying money, but we are not collecting rental. So you keep paying money, you are not collecting rental, although all this monthly installment, you can use your CPF to pay, but today we need to do a very prudent financial planning to you. What if one day you are not working? What if one day you do not have CPF contribution? Buying a new launch development, you need to set aside the money. You need to set aside how much? Set aside $44,500, and this investment is good to go. Down payment for $448,000. With regardless you buy new launch or resale, you need to pay the down payment. The monthly installment throughout these 4 years. Set aside $45,000. Then You're not working, I'm also not worried. Your property is in good hand for these 4 years. And also, this is based on 2.5% interest rate. 2.5%, 44,500. And now we do something that is more extreme. We do 3.5% interest rate, because everybody is talking about interest rate is raising. Okay, now new launch, interest is roughly 1.8, 1.9, maybe hitting 2. Today we do the stress test on 3.5%. Based on 3.5% interest rate, same 25 years, how much more we need to get ready? Instead of 44,500, we get ready another 5,000 more. Set aside roughly 50K, and your investment in new launch for 4 years will be really, really good to go. So now the question is, I set aside this much of money from launch to completion. Exit plan, you can sell 5 years later, you can sell 7 years later, you can sell 10 years later, up to you. But the minimum holding period is only the cross the seller stamp duty period, which is 3 years. So today we do the stress test, everything based on 4 years. So buying a new launch property, down payment, what is the total sum that we are looking at? Just now we have already touched on the down payment, 25% plus stamp duty is 448,600. Okay, follow me with the numbers. This is the down payment, the upfront payment needed. And not forget, no rental, and yet keep paying monthly installment, progressive payment, 44,500. This one based on 2.5%. So to add up these two amounts, to add up these two, total, I force you to set aside 493,000 to enter this new launch. Instead of putting this money in your fixed deposit, you choose to put in new launch. And what are the approximate return that we are looking at? Target TOP valuation. You purchase a property from developer around $1.6 million. 4 years later, target TOP valuation, we are looking at around $1.85 million. So because you are getting loan, by that time, 4 years later, your outstanding loan is 1.175. This is your outstanding loan. So outstanding loan, your TOP valuation minus your outstanding loan, your wealth, your property, your wealth is 674,000. So 674, because valuation is this much, then you minus your outstanding, okay, then you have wealth this much. And the very important thing is, I required you to come up 493,000. 493,000 for this investment. This 493,000 has include your upfront payment, has include your progressive payment, which is a repayment for the 4 years. And if you have sold the property at $1.85 million, if you manage to sell it at $1.85 million, you profited 181,000. The smart investor are using the least cash money to gain the highest return. That's why your agents, your trusted advisor always ask you to get maximum loan. With the minimum upfront, then highest return. With this return, you make 36.8% return on your invested fund, because we squeeze you 493,000 out to buy this $1.6 million property. Then you have got 36.8% return in this invested amount. So average per year, 9.2%. There is a reason why Eugene and I keep on buying property, because putting the money in the property is better than put the money in the fixed deposit. Risk is not a risk if you manage it well. So it's very important that you need to identify the risk. You need to assess the risk. Then you can control the risk. So numbers have to be very clear. How much money that you put in, how much is your expected return. You can actually do these activities, right, with all the EIA realtor. Can just give them a call who invited you to meet up with them, and they are all acquired certain skill set to go through this prudent financial plan together with you. Okay. Then there is another very important thing is why. I mean, the insights of buying new launch. Why is new launch? Margin of safety concept. Number one, lower commitment, buying new launch. Number two, untold price support level. And number three, quality assurance. Lower commitment, what does it mean, lower commitment? As what I go through just now, okay, throughout these 4 years buying a new launch, why is lower commitment? You are not collecting any rental. You still need to pay money. You still need to pay 44,000. We don't count upfront, okay? Because regardless you buy new launch or you buy resale, upfront is the same. So these 4 years without collecting rental, you pay $44,500. You own the property, not giving you anything, only pay money. And let us compare with resale. Resale property will give you rental return. This is what some of the investors are looking at. But you may overlook something. When you are buying a resale property, yes, $1.6 million roughly, okay, the rental return is around $4,000 per month. You are collecting $4,000 per month. What is your monthly repayment? Because a loan is already fully kicked in already. So your monthly repayment, it will be looking at $5,383 per month. And this is also based on 2.5% interest rate. And not to forget, you get the property already, you need to pay for monthly maintenance fee. This one not tenant pay, landlord pay. Landlord have to pay for monthly maintenance fee, and not to forget, you have to pay government money. You have to pay property tax. So these are the expenses that you have to pay. I always say that you eat or you don't eat, you go to work or you are not working, okay, you have to pay this much of money. Your monthly installment, okay, your property tax, your maintenance fee. So minus off your rental $4,000, minus off the rental $4,000, you still need to top up $2,143 per month. So we compare new launch and resale. Same over 48 months. Your resale, you have already paid over 100,000 for these 48 months. But for new launch wise, a brand new property that is just collected the key, your commitment is 44,000 in these 48 months. For resale, we still have not calculated what if in between there are a gap, there is no tenant. And of course, we need to pay for agent fee as well. So if let's say we are looking at this, resale property has got a lot higher commitment. That's why lots of investors love to invest in new launch. Then there is another very inside news is why you should look into new launch. Untold price support level. Always enter a property purchase buying the same price with all your neighbors. What does it mean? Try to join all the developer sales together. How can it be same price? One launch, 5th floor and below, roughly same PSF. Higher floor, all the high floor unit will be roughly same PSF. You cannot expect low floor and high floor lah. Low floor definitely cheaper, high floor definitely more premium because you are getting a very premium view. You have to enter, everybody enter at similar price. These are your neighbors will help you to hold the price together. Let's assume that if you are buying $1 million, okay, everybody buying at $1 million. Will you sell at 600,000? Will you sell at 800,000? Okay, there could be one person that fire sale wanted to do so, but it won't be all. This 100% of $1 million, they purchase $1 million property, right? Everybody only have one target. They want to sell above $1 million. So it's unlikely to pull down by certain people. It may happen 1 or 2 fire sale, but it cannot be majority. So let's take a look at this. We use the Panorama as an example. Panorama is one of the resale development in Ang-Mo-Kio, the land from year 2013. So when launched this project, that time it is in year 2014 and 2015. Follow my cursor. Let me see if I have this. Okay, no. So follow my cursor. When year 2015, everybody entering together. Specifically, I put up the data is all for stack 05. Stack 05 is actually a 3-bedroom unit. So when you see the entry price, in year 2015, everybody is entering at a similar price. Per square feet is around 1,002 to 1,003 PSF. So the 3-bedroom is around like $1.3 million. Everybody is holding the same price. And these are the lucky star. In year 2022, 1905 have sold his or hers unit at 1,800 PSF. So let me ask you a question. If you enter same price in year 2015 during developer sale, you bought it at 1,002, 1,003 PSF. Will you sell it at 1,000 PSF? Will you sell it at 1,000 PSF? I should ask a question. Will you sell it at 1,000 PSF? You will. You type 1. You will not sell it below 1,002 PSF. You will not sell it below 1,002 PSF. Type 2. See whether you are still with me or not. Okay. Thank you very much. I see a lot of 2. Thank you that you are still with me. Okay. Yes. All these are the neighbors that who is going to hold the price together with you. You will always hate the neighbors if they sell any lower. Okay. And these have already marked the transaction. So all these 2015 owner that who have entered together are very happy to see this transaction, and they will only calling higher than this. It will be never, it will never lower than 1,002 PSF. So buying a new launch, the best thing is enter at the same price together with your neighbors. And very important, quality assurance. As you know, when you are buying direct from developer, you will have 1 year warranty period. This 1 year warranty period, it attracts a lot of buyer to buy from you upon TOP or after you get your key. They are getting a brand new development, new painting, new piping, everything is new. Compared to a 20 years old development, they will have to spend 200,000, 100,000 or 300,000 for renovation. Might as well hassle-free, just buying a brand new one. So quality assurance. That is why we love to enter new launch property. So this is something that always bothering you when you cannot see the actual thing. You're asking me to buy a new launch, okay? Based on a piece of paper, what are the performance? How much can I really make? I'm not a crystal ball, okay? I'm just together, same like all of you, we are doing the study together. Buying from a piece of paper, not sure what is going to happen. Agent showing you the showroom without showing you the actual view, without showing you the actual layout. We are all study the floor plan together. What is my return? Do I want to take this risk? Do I really want to take this risk to buy a piece of paper at $1.6 million? Okay, so we can actually study together from the performance from launch, okay, to TOP. So this is a real case study, Park Colonia. Park Colonia is one of the development newly TOP 2 months back, just gotten the key. It launched on the 5th of July, year 2018. This development have fully sold already. Don't ask me whether they still have or they don't have. This one is right beside 𝙂𝙖𝙞𝙬𝙀 MRT. Fully sold and collecting key. And let's see the performance of Park Colonia. Day 1. If you are one of the owner, congratulations, okay? Day 1, when they launched, that time is in year 2018. So these are the purchaser that have bought with not really day 1. Some of them definitely is from developer sales in year 2018 and year 2019. They bought in this date. And then these are the recent resale unit. They have managed to sell their unit after the seller stamp duty, which is across the seller stamp duty should be in year 2021 and 2022. Let's take a look at their profit. The highest profit is the bigger unit, okay? The 3-bedroom have made 300,000 to 400,000. Holding period on hand is just about 3 years to 4 years, okay? The bigger unit make 300,000 to 400,000, and when we are looking at the smaller unit, 600 plus square feet, they are making average about 200 plus thousand. What I want to show you is there is zero negative sales. Every units are making profit. They have choose to enter during developer launch. And there's another project also launched at the same time as Park Colonia. This is Sterling Residences. Walking distance to Queenstown MRT. They have same character, which is very near to the MRT station. Then this is launched on the same day as Park Colonia as well. Let's come and take a look at the performance. The one has got a lot more resale transaction. So they bought all on the 2018 and 2019, same. Then they sold this year, 2022, and you can see the profit. These are the purchaser that we have bought during paper time, which is they buy through floor plan only. It may not be day 1, okay? Maybe it's during the half year of the launch or 2 years after the launch, okay? And also zero negative sales. So these 2 examples is to share with you. Majority new launch direct from developer sales are able to make some profit. So the new launch margin of safety is safer, we have lower commitment, and then we have a lot of neighbors that can hold the price together with us. And the very important thing is the quality assurance. And also to touch on a little what happened in year 2022. We are still in year 2022 now. 2022 launches. Piccadilly Grand. First day launch, balloting, more than 1,500 checks, 77% sold. Second one, right away after Piccadilly Grand, we have got Leaf F&B and over 75% sold. And there's another one, which is just now I touched on already. 𝑎more Residence, over 98% sold. This shows you what? High interest rate, rental increase, so strong demand. There are still a lot of buyers in the market. They are looking for investment. They are looking for homestay. It is unlikely for the price to come down. This is just sudden thought, okay? Because they keep on saying that the price will be going down. But when I'm looking at all these launch, right, it is only whether you ballot, you can get the unit or not. There's another thing. Every one of us have been there whole day and check is double or triple of the available units. And now, next hot topic is what? Is this. We are talking about Lentor Modern. This will be the next mega launch. It is so exciting. Integrated development is so rare in the market. And this Lentor Modern, we have got directly linked to Lentor MRT. So we are expecting a very strong response for Lentor Modern. And we are targeting to open on the 2nd of September. Jot down this date. Childcare is targeted to open on the 2nd of September. And of course, you are not going to buy because it's not open and buy. We need to go through the whole process like Piccadilly Grand, like Leaf F&B, like 𝑎more again and again. We need to go for balloting. Okay, you can register with your ERA agent. Then they will bring you to take a look at the showroom. Okay, so I hope that today's session is helpful to you guys, okay? Because we're still waiting for Eugene, okay? It is very important to let Eugene to share with you what are the rest of the insights. Really appreciate your time. Later, I'll be back again. I will pass the mic to Eugene and let Eugene share with you the rest of the insights. Okay? Eugene, are you there?
Yes, thank you, Alisha.
Thank you very much.
Yes, Eugene Koh here. Can you guys see me? If you can see me on screen already, can you probably just type something in the chat so that I know that you guys can listen to me and can see me on screen. Okay, thank you. Thanks a lot. Okay, so we start off my part with a simple question. So if you want to share your opinions, can you just type in the chat, then we all learn together. So other than increasing rental and strong underlying demand for properties as shared by Alicia earlier, what other factors are actually supporting real estate prices? Okay, just share your opinion on the chat if you have any. Okay, probably think through what other factors are actually supporting real estate prices. Okay, Singapore economy, thank you. OMO, okay, there are some people typing into only hosts and panelists. You can type to everyone so that we can all learn together. Okay, so there are a lot of reasons, but the reason that I want to share today is closer to our heart, closer to all of us, is actually this salary increase. Okay, the truth is salary have increased, but by how much? Okay, so this is an article that shared that salary increased by 3.9% in year 2021. So salary has increased by 3.9% in year 2021. And this is Ministry of Manpower data, whereby the total wage growth, if you can read over here at the circle portion, the total wage growth among employees who have been with the same employer, okay, was 3.9%. Okay, but if you would have switched employers in the last 1 year, your salary growth would have been higher potentially, usually higher lah. If you switch employer, it will probably be higher than 3.9%. So salary have increased in year 2021. And what about 2022? 2022, we are also expecting salary to increase. These are the Business Times and Straits Times article. Starting from Straits Times, 23,000 civil servants to get pay rise of between 5 and 14% from August. And from Business Times, bigger pay hikes as employers price in higher cost of living. So as in Alicia's earlier example, whereby with higher interest rate, we need to pay a couple $100 more in monthly repayment. So what we can expect to see is that, you know, with all these pay rise, right, if you're a landlord, your tenant will have the pay rise to pay you slightly higher rental. And if you're a homeowner, hopefully you also get your pay rise, then you can also afford the higher monthly repayment. So salary affordability is one of the big reasons that is holding up the market on top of increasing rentals and very strong underlying demand. Okay, and now is the time. We all know that interest rates are rising. So in these moments like this, is it better to invest in a new launch or a resale property? So if you think it's resale property, you can probably type a 1 in the chat. New launch property, you can type a 2 in the chat. Okay, there's no right or no wrong, just personal opinion. Okay, so it can be 1 or it can be 2. Okay, some it might be resale because we can collect rental, or is it new launch? Okay, so which is a better option? Okay, but only specifically to interest rate increasing. Okay, so we'll just go through this simple case study. Thank you for all your participation. We'll just go through this simple case study whereby we evaluate for a resale property at 1.5 million. If you take a 75% loan of 1.125 million, your interest every year would be, if we use a rate of 2%, which means it's 2% times the loan amount, 2% times 1.125 million, it will be 22,500. But if interest rate increase to 3%, your interest for the first year will be 3% roughly, 3% times 1.125 million, which is 33,750. So a 1% interest rate increase, it will be 33,750 minus 22,500, which is 11,250. So your interest expense actually increases by 11,000. Okay, for a resale property, a 1% interest rate increase. Okay, but what about for a new launch property? Okay, consider a new launch property, 4 years to completion, the same 1.5 million. If you take a 75% loan, if interest is 2%, you'll be paying roughly 15,000 interest over 4 years. Okay, and it will be 3,785 every year. So your interest expense every year will be roughly 3,785 because it's roughly 15,000 over 4 years due to progressive payment. In fact, upon TOP and CSC, 40% of your purchase price will then be disbursed. So the maximum amount you are going to pay before collecting your keys is 60% of the purchase price. So because of this progressive payment, the interest payable for new launch property is significantly lower over the period to completion. And if we consider the interest rate to be at 3%, you'll be paying 22,000 interest over 4 years and 5,600 every year. Okay, so if we evaluate the 1% increase in interest rate for a new launch property, we are looking at 5,697, which is the yearly interest at 3%, minus 3,785, which is the yearly interest for at 2%. So a 1% interest rate increase, you are only paying 1,900 extra for the new launch property. But a 1% rate increase for the resale property will be $11,000 extra. So this simple example, you can see that resale properties are actually 6 times more exposed to interest rate risk over the next 4 years, considering a new launch development, 4 years to completion. Okay, so insight number 3 for today. Insight number three is that new homes are actually less impacted by rising interest rate. So of all the factors that we have seen, maybe higher salary or very strong demand, and what we can really expect over the next 3 to 4 years is that new homes are still not so much impacted by rising interest rate. Every 1% rate increase for a $1.6 million property, we are looking at $1,900 extra a year and potentially probably $150 a month. Okay, and this is because of progressive payment. And because of this, we are actually expecting investor demand to shift from resale properties to new launch properties. Okay, especially in times of rising interest rate. Okay, so now, okay, which development has higher, in your opinion, just in your opinion, just by this photo, okay, just by this photo, which development has higher potential for capital appreciation? Okay, these two developments are located in the same area, in fact, side by side. Okay, the photo on the left is a development that is just completed. Okay, and you can see a name there, and the development on the right is as such. So in your opinion, the development on the left is development 1, and this is development 2. So in your opinion, you can type in the chat now, which development has higher potential for capital appreciation? In fact, development 2 is a freehold development, and development 1 is a leasehold development. Okay, so you can see in the chat. Okay, so overwhelming ones. Okay, so we will now go through the numbers. Okay, actually which development has better appreciation? Okay, so is Martin Modern is the development on the left, Starlight Suites is the development on the right. Okay, in fact, Starlight Suites is probably 10 years old. Martin Modern is newly completed. Okay, and they are all located in the same area near to River Valley. So Martin Modern is over here, just completed around a year ago, or roughly there, couple of months to a year. Starlight Suites is right beside. Starlight Suites is a freehold development. Martin Modern is a 99-year leasehold development. Okay, that I will share again. Okay, going through the numbers. Okay, these are the profitable transaction at Martin Modern. In fact, there's no unprofitable transaction, and you can see that entering in 2017 July as a brand new launch, the profit can go more than $1 million, up to 1 million, just a holding period of 4 years. Okay, but on the other side of the coin, at Starlight Suites, majority are unprofitable transaction, and even entering at the same time in 2017, the highest is a $10,000 profit. So you can see that indeed, premium developments can potentially protect value better. Okay, and I will show this. And specifically to Martin Modern is appreciation. You can see that in 21st of July 2017, an investor invested in 2108. It's a 3-bedroom at 1399 square feet. They enter at 3.16 million. And just 4 years later, in 11th of August, they exited at 4.23 million. It is a $1.1 million profit in 4 years. Okay, and you can see another illustration, same thing, buy during launch during July 2017. I think it should be a launch day, and exited in November last year. From this should be a 4-bedroom, 1733 square feet, enter at 3.75 million, exit at 4.9 million. It's a $1.15 million profit. Okay, and so now I will show you a video. Why is it that homeowners are willing to pay the premium for Martin Modern over Starlight Suites? Okay, so as mentioned, Insight 4 of today is quality development by proven developers protect value better. Okay, and just enjoy this short video on why are homeowners paying this premium for Martin Modern. Okay, and yes, Martin Modern is developed by 𝘂𝘢𝙗𝙗. So 𝘂𝘂𝙗𝙗 is well known, a branded developer who is well known for their beautiful landscaping, very premium finishes, and even top of the line fittings. Okay, so and of course, Lentor Modern is also developed by 𝘂𝘂𝙗𝙗. In fact, this development, like what Alicia mentioned, we are all very excited for this development, Lentor Modern, because it's developed by 𝘂𝘂𝙗𝙗. And you can look at the artist impression. On top, we have the residential units, and right below, we have the retail shops, and also we have Lentor MRT. Okay, and this highly sought after plot of land, you can look at the bids, 9 bids, and these are almost all the big developers in Singapore, which include City Developments, MCL Land, 𝘠𝘢𝙗𝙗𝙗, UOL Group, Far East, and basically all the names are here. And you can see that this plot of land is so highly sought after. Okay, but of course, 𝘂𝘂𝙗𝙗 got it. Okay, and who is 𝘂𝘂𝙗𝙗? Singapore listed developer. Most of you will have known 𝘂𝘂𝙗𝙗. Okay, they have developed and completed many developments in Singapore. Okay, but I will want to put mention into a couple of them. Firstly is 𝘂𝘕𝐺 Residences. So 𝘂𝘕𝐺 Residences is right on top of Tanjong Pagar MRT. It's also integrated concept. And of course, when we look at Midtown Bay and Midtown Modern is right on top of Bugis MRT, and Midtown Bay is just nearby, part of the 𝘂𝘂 Midtown transformation. And you can see that 𝘂𝘂𝙗𝙗 is no stranger to the integrated concept. And 𝘂𝘕𝐺 Residences, together with Tanjong Pagar Centre, is completed and extremely well done. And they are going to bring their expertise right into Lentor to develop the one and probably best plot, Lentor Modern over here. Okay, so insight number 5 of today that we are going to share, insight 5, is what are the advantages of an integrated development. Firstly, it's a safer investment. Secondly, is typically above market price performance. And thirdly, almost higher rental all the time. If not higher rental all the time. Okay, almost. So far I cannot find any data that the rental is not higher, but I just add almost just to be safe. Okay, and why is integrated development a safer investment? And it is because it appeals to both the homestay owners as well as the tenants. The tenants are looking for MRT, they are looking for shopping mall, they are looking for convenience, they are looking for amenities, just like the family, just like the homestay purchasers. They want their children to take the MRT back home. They want to probably after work and after school, if the family is not cooking, they can just go down and have a meal and all come up together. So it offers convenience, and because of that, there's higher demand for integrated homes. And generally, units in integrated development is much easier to rent out. Okay, and let's look at the price performance of integrated development also. So we will share a case study here. It's on North Park Residence. North Park Residences is located on top of the North Point Shopping Mall in the Yishun area and very near to Yishun MRT. Okay, it's launched in year 2015, and if you consider 2015 to 2021, the price of North Park increases by 13.6%, and all other condos in District 27 increased by 7.4%. So you can see that North Park Residences have slightly higher capital gain than all other condos in District 27. Case study 2, Watertown at Punggol. And Watertown also enjoy higher capital gain from launch 2012, almost 10 years to 2021. Watertown integrated development appreciated 16.4%, and all other condos in District 19 increased by 11.1%. So again, on integrated development, generally safer because very strong demand for such units. And secondly, now we can see that the price performance maybe not the best, but is above market returns. Okay, and renter, if you have any doubt that units in integrated development do not command higher rental, you can take a look at this. Orchard Residences compared to all condos in District 9, Orchard Residences 630 per square foot, all other condos add up 430. Same for South Beach, Park Place at Paya Lebar, Poise at Potong Pasir, Atra, Red Hill, North Park, Yishun, Watertown, Punggol. The same is true. Integrated development command a higher rental and is easier to rent out. And also, if we take Poise Residences as an example, if we compare even developments within walking distance to MRT, even if you are within walking distance to MRT, which is near to Potong Pasir, okay, comparing Poise and the rest, you can see Poise Residences, because it's integrated with direct link to Potong Pasir MRT, it commands a higher rental than all the other developments in the area. You can see Poise Residences here, command $5.10 per square foot, 117 transaction, very high, okay, and it's the highest rental per square foot. Park Place Residences, direct link to Paya Lebar MRT with the beautiful Paya Lebar quarters. A lot of malls around there. And even when we compare Park Place Residences with all the other near to MRT developments, we can see that Park Place Residences command a higher rental, even higher than Katong Regency, which is also on top of a mall, but further from the MRT. Okay, so integrated developments rental, okay, is also higher than the development that's within walking distance to MRT also. Okay, and because of these reasons, because that generally is a safer investment, you know, higher than market growth and higher rental, integrated developments enjoy very remarkable interest. The last 1 year, we have launched 2 integrated development. We can look at Canning Hill Pierce here. Canning Hill Pierce is the former Liang Court, and it sold 77% of its unit in the first day, okay, which is over 500 units, including the 48 million penthouse, recording over $5,000 per square foot. And at Pasir Ris, the development that's on top of Pasir Ris MRT, Pasir Ris 8, they sold 85% of their units, okay, up to $2,000 per square foot. And today, Canning Hill Pierce is already 95% sold, and Pasir Ris 8 is above 90% sold. But why is it that, you know, investors are willing to pay this premium for integrated development? It's also because it's very, very rare. Very, very rare to have, to be able to get a unit in an integrated development. And if you add up all the units in integrated development, and of course today we will add Lentor Modern into the list. Lentor Modern is over here, 605 units. There are only 10,000 units in integrated development in Singapore, and only 2.63% of all condo units in Singapore are located in integrated development. So because it's so rare, investors are willing to pay a premium for units in integrated development. And not only that, if we look at Lentor Modern, okay, not only is developed by a very branded developer, 𝘂𝙗𝙗𝙗 with a proven track record of very well done development with beautiful landscaping, okay, and Lentor Modern is the first plot to launch in this Lentor area and the best plot. Why is it the best plot? Because it's the one and only integrated development in the Lentor vicinity. And easily, if you track out any data, even nearby developments to an integrated development command a huge premium. Okay, because it's just integrated. Okay, with all the convenience right at your doorstep. Okay, and so basically this is Lentor Modern, the MRT is here. So this entire Lentor area, 5 other plots of land are coming up, which I'll go through now. Okay, Lentor Modern is over here, is expected to launch in September. 2nd of September is the targeted date. And you can see 5 other plots of land are right here. And Parcel A have been sold already, awarded in January 2022. And we can see that Lentor Hills Parcel B over here and over Lentor Central over here is open for tender already. And a plot here is under the reserve lease, and Lentor Gardens is under the confirmed lease in second half of this year. So what you can see is that Lentor Modern not only is integrated by a good developer and one and only best plot, and investing in Lentor Modern, you can potentially profit from the upcoming launches in the area. Okay, and to share a little on the integrated Lentor Modern, firstly, residences, 605 units, retail, 96,000 square feet of commercial space, direct link to MRT with 12,000 square feet of supermarket and 10,000 square feet of childcare centre. Okay, and this is the perspective that you will see, okay, of Lentor Modern, which is directly connected to the MRT and retail mall. So basically, you know, you can actually secure your Lentor Modern appointment with your ERA realtor, and as what Alicia has mentioned, design your prudent financial plan before you make any property purchase decision. Okay, so before I conclude the session to the 5 insights to new home investment, can I get Alicia back here? Okay, Alicia, okay. So a summary of the 5 insights that we shared today. Okay, the first insight shared by Alicia is always invest with a prudent financial plan. So what Alicia has shared is that on top of the upfront payment, okay, prepare a 4-year safety net of buffer funds. And this 4-year safety net, you'll be even more prudent to stress test it at 3.5%. Okay, and concept 2, margin of safety concept for new launches. Firstly, lower commitment in terms of your payments that you need to make over the next 4 years. Secondly, it is the fact that your neighbors are holding the price together with you. So the neighbors are all holding the price together with you is a very strong price support level. And insight 3, we can see that new homes are indeed less impacted by rising interest rate. In fact, 6 times less impacted. And insight 4, quality development by trusted developers protect value better. So, of course, you know, real estate investment is just like any other investment that is risk. There's risk involved. But to minimize this risk, so our search is to search for the development with potentially lower risk and higher returns. And one of the very important factor is development by trusted developers do indeed protect value better. And insight 4, integrated development do have advantage. Okay, so these are the 5 insights for today. And Alicia, you can share with us to end this session.
I think it's good. We really hope that today's session does put some inputs to all of you, and I hope that it is helpful to every one of you.